Hi, how are you? I'm here to talk about reverse mortgages with Harlan Accola, author of Home Equity and Reverse Mortgage. I would love to give you a copy of this book when we meet. Harlan, I just have a few questions for you. What changed in recent years for reverse mortgages for the better?
Well, Aaron, they've been around since 1988, which is relatively new when you think about it. It was during Reagan's years. But there's been a number of things that have changed with protection for the spouse, with additional scenarios of being able to make sure that people don't run into foreclosure when they can't afford to pay their taxes and insurance. But the biggest thing that has changed is that there's been a lot of research done that proves in the financial planning area that if you do a reverse mortgage when you turn 62 instead of waiting until you're broke or 82 or 92, that three things will happen. First of all, you will have more cash flow to spend during your retirement because obviously you're not making a mortgage payment or you're pulling money out of your house. Secondly, you will pay less in income taxes. All the money that comes out of a house is tax-free. And thirdly, you'll actually end up giving more to your kids in the long run. So when the research was done, everybody thought a reverse mortgage is great for the people that are broke and the people that are running out of money. Mm-hmm. But when they realized that when you literally reversed the process and you took money out of your house first and you left all the money in your investments grow instead of using them in the beginning, that you were better off and your kids were better off in the long run. So I think the biggest thing that's changed is when the research has been done, it's been proven the best time to do a reverse mortgage is now, not later. And that's kind of earth-shaking because everybody thought differently, even financial advisors, attorneys, CPAs, they're all thinking, oh no, this is something you do at the end, not realizing that, wait, if we do this in the beginning, and that research has proven over and over that gives a better retirement.
Okay, yeah, fair enough. Could you in part describe the non-recourse feature in this? I've heard that you can have a $400,000 home, but you can run your line of credit up to $600,000. What then? Mm-hmm.
So the thing is that this is protected by federal mortgage insurance. So just like you put homeowners insurance in your car or you have flood insurance or whatever, the reverse mortgage insurance, that's Federal Housing Administration. It's funny, some people say it's a scam. If this is a scam, it's a federally run scam because the Federal Housing Administration guarantees it. And nobody has ever been required to make a payment on a house that's upside down at the end. Not the kids, not the trust, not the surviving spouse or anyone else. So you're guaranteed that no matter how long you live in your house, even up to 150, whatever money we give you, that interest accrues and goes up, you never make a payment during that entire time period, that if at the end your house is worth less than what you owe, the difference is forgiven by Federal Housing Administration mortgage insurance. However, if it's the other way around, and your house is worth $1 million with inflation and you've used $600,000 at 90 years old and you pass away, well, you pay us back the $600,000 and the kids get the other $400,000. So you're guaranteed not to lose. And think about that. So many things in life are a gamble. Yeah. And you don't know. It might turn out good. It might turn out bad. If house prices go way up or they go way down, if we have inflation or we have deflation, either way, you're going to be protected and so is your family.
Oh, that's great. Can I do this on my vacation home or second home?
Not right now. There's products in the future that are going to be there. Probably when you get as old as me, those products will be around. But right now they're not. It's only for your primary residence. Okay. However, we just did a scenario last week for a client in Kansas who is pulling money out of his house that is his primary residence to buy a vacation home. So even though you can only do the reverse mortgage on your main home, there's no restrictions of what you do with the money. So you could buy a vacation home, you could help your kids buy a house, you could buy a boat, whatever you want to do with it, but the mortgage itself is placed on your home and then no payment is required.
So you get two houses in one payment, is what you're saying?
Well, two houses and zero payments. Because if I pull the money out of the house and I have enough in my primary residence for more than a down payment, I'm not making a payment on the reverse mortgage and I'm not making a payment on the vacation home because I paid cash for it. So you could literally have two houses and no payment. Sounds too good to be true, doesn't it?
That's pretty crazy.
You got to be over 62 though, so you can't do it.
Well, I can't wait for that point. So why is getting a financial planner involved so important within this transaction?
That's the big deal. We think about money that we put away for the future. You're taught from the time you're 18, 19 years old, and you've got a financial advisor that tells you to put money away for the future so that you will have money when you don't want to work anymore or you can't work anymore. And so that is for your family in the long run. So the issue is that a house is really a place that you're storing money. You're storing people there. You're storing your wife and your son there, and you live there, but you're also storing money there. And it's going up every year. As you make a payment, the mortgage balance goes down, the value of the house goes up. So you're storing money in your house, just like you're storing money in a 401k and an IRA. So what's important is when you get to retirement, or as you're planning for retirement, working with a financial advisor is important, because I'm taking a look at all of my assets. I'm taking a look at what's going on with my house, my IRA, my 401k, my savings account, what's going on with my Social Security, and those things all need to be looked at together. And you can't really just look at what you do with your house, or what's going on with your IRA, or when you're going to draw Social Security. All three of those things work together. So you want a couple of professionals, sometimes 3 or 4, with an insurance person, a CPA, maybe an attorney, and some trust. You want a team of people looking at that, because all of them have different specialties. We specialize, of course, in liability management and in home equity values, but they're specializing in stocks and bonds and mutual funds. So what we need to do is really look at that whole picture together. Because if I'm taking money out of my house, or I eliminated my mortgage payment, the day I eliminated my mortgage payment, the next month, I had $3,000 that I didn't know what to do with. So I went to my financial advisor and I started giving him $3,000 a month, because I could still afford to make my mortgage payment.
Yeah.
So he was really happy to see me, and he's happy to see me every month now, because I'm bringing him another $3,000 to invest. But I shouldn't do this in a vacuum and just say, oh, I don't have a house payment, let's just go blow it and have fun. Well, that's because I'm still working. That's part of my future when I don't work anymore.
Okay, great.
And by the way, a financial planner should also want to work with you, because you're sitting on $11 trillion worth of wealth that people like me over 62 are storing in their houses. That should be part of the plan. And he needs you, she needs you to be able to unlock that equity.
So that 11 trillion you're talking about, just for our people watching this, is the amount of equity, funny money, if you will, that people are sitting on that's locked in their house that they can't do anything with.
Just people over 62. That doesn't even count your equity. It's just the people over 62 are sitting on 11 trillion. Completely worthless, doing nothing. It will never take their kids on vacation, their grandkids on vacation. It'll never take care of the roof. It will never allow them to buy a car or a boat. It's just sitting there, and they can talk about it, but they can do nothing with it. Wow. Doesn't make a lot of sense. You wouldn't do that with regular money.
Right.
And just store it somewhere and not do anything with it, and just say, oh, I got this statement.
Right, exactly. Okay, so on that, with that money that's sitting in homes, can, my parents, for example, leave more of a financial legacy using the home equity first, rather than the traditional line of thinking of, let's just pay for the house and then we'll give it to the kids at the end of the line. Aren't they supposed to do that? Leave it in the house and that's it?
Well, it's amazing. It's almost like people were taught that in kindergarten and first grade, because it gets recited automatically. I've done thousands of these loans in the last 19 years. And there is not one person that said, but just a minute, I think the kids want the house. I will specifically sometimes ask them, let's call the kids. Do they want the house? No, they just want the value of the house, because by the time I'm 90 and the kids are 60, I hope they have their house by then. So they don't want my house. In fact, the kids right now make fun of our green countertops. They don't like them. So they don't want to move into our house. They don't like the layout. They want a different neighborhood, everything else.
Sure.
So they don't want the house. They want the money. So if you want to give money to your kids, the most efficient way to give money to your kids is with a Roth IRA or with life insurance. And so it's more effective than paying your house down to zero. So if I don't pay my house down to zero and I pull money out of my house to live in, it is true that they get less equity, but they get more cash.
Sure.
And so what's more valuable? They got to convert the equity to cash anyway. So what's kind of funny is that I've asked people, what are you going to do with your house when you die? And they all say, well, I'm going to give my house to my kids. I said, do they want it? And it's really strange because at that point, well, I think so. Well, they'd at least want to sell it.
Right. Right.
And the truth is they don't want the house, they want the money. And if we really are strategically looking at how do we leave a legacy to our kids, there's more effective ways to do it than the house. Now, my kids are going to inherit my house, and there is going to be a reverse mortgage on it. So let's say they inherited $1 million in the example that I used before, and I owe $600,000. I've got 4 sons, so all 4 of those kids will get $100,000 of what's left after they sell the house. But that's not the primary legacy. The main thing I want to do is give them money while I'm alive, and I also want to leave them with life insurance and or Roth conversions of Roth IRAs, because now they can take that and use that money. Now, the other thing is, though, I'm going to give my kids less when I die because I want to give my kids more now. Mm-hmm. This is a huge, important thing that a lot of people have never thought of. And I encourage anyone that's listening to really think about this. I ran into a financial advisor in the Carolinas a long time ago, and he said, Harlan, do you want to give the money that you don't need to live? Do you want to give it away with a warm hand or a cold hand? Mm-hmm. And I've never forgot about that. And I started giving money away with a warm hand because our kids really need it more now when they've got little families and they got all this stuff going on and they can't really afford to go on vacation, or they can't really afford to do some of the things that I can do with them. Mm-hmm. And maybe you'd call that selfish, because my wife and I like to go on vacation with our kids. And if we save all of our money and give it to them when we die, they're going to go on vacation without us. Yeah. So we kind of like to go on vacation with them. And when you really think about why do you want to give your house to your kids? Well, you want to give wealth to your kids. What's wrong with giving wealth and memories to the kids now rather than waiting?
So when you're giving with a cold hand versus warm hand, the warm hand, you're not just giving them bags of cash. You're taking them on vacations. You're creating memories for them and the grandkids.
And helping them with their down payment on their house. And one son, they needed to replace the fireplace, install a gas fireplace in their basement. Mm-hmm. I said, let me help you with that, because I can enjoy that with you, and I'll loan you some money for it on a no interest loan, and hurry up and get that fireplace in your house. So I'd rather sit around then and enjoy that fireplace, which we just did on Sunday afternoon when it was 4 degrees outside, and we got to enjoy that fireplace with them. And so would they have waited longer? Yeah, probably. Because now with interest rates higher, they went to taking out an 8% home equity loan. And so I helped them with a no interest loan to be fair to the other kids, and they got the fireplace now. So there's all kinds of ways. But yes, we give them money for their birthday, but yeah, we're not handing them bags of cash. Correct. We're not that wealthy yet.
So few folks that are watching, there's children, there's folks that are potentially interested in reverse mortgage. To those people who are still hesitant, who remember the reverses of old, banks taking their home and bad things with like the Wells Fargo thing that happened where folks were losing homes because a spouse died. What can you tell someone who is just on the fence or just doesn't know or is still skeptical? Because again, we're not trying to get anyone over on anything. We just want to educate and let people know this Swiss Army knife of a tool is available.
Yeah, I think the most important thing that anyone that is listening has to look at, regardless of what age you are, is just because Bernie Madoff ripped off a bunch of people, I guess everybody knows who Bernie Madoff is, that he ripped off all kinds of people that were investing money. That doesn't mean that you stop investing money. It just means that you're careful how you do it. Just because some people lost their house because of a reverse mortgage, because it was not even a reverse mortgage and it was a shared equity loan or whatever, doesn't mean that you should. In fact, I cover that in chapter 6 in my book. It's called Drug, Sex, and Reverse Mortgages, which is kind of a crazy chapter. But it's just that things can be good or bad. Depends on how they're used. Drugs can kill you or they can save your life. Sex, of course, can be good or evil. And obviously, reverse mortgages can be good or evil. Anything can be if it's used incorrectly. And so give it a chance, because it's such a huge amount of wealth, and take it from somebody that's worked with clients for the last 19 years that has dramatically changed their lives for the better, and people that have told everyone, hey, this has completely changed my life for the better. This is fantastic. My own family, my own personal situation. And you need to take another look. It costs you nothing to take a look at it. And for those of you that are in your 40s, 30s, 40s, 50s, the biggest threat to your inheritance, the biggest threat to your retirement is your parents' retirement. If that's screwed up, you're not going to leave your parents out in the cold. and that will affect. I worked with a couple, or with two sisters that were sending $1,000 a month to their parents so that they could stay in their house and make their house payment. What does that do to their retirement?
Right.
I mean, their parents fell in some hard times, but we took care of a reverse mortgage, and all of that money stopped going out to Oregon where they were sending it. So the bottom line is let's work together to make sure that your parents not only have the best life now, but really that it's a benefit to you in the end as well.
Awesome. Well, I really appreciate you taking the time to meet with me. For any questions, reach out to me. My number is 970-215-4854, teamlawsonloans.com. Shoot me a text, give me a call, and I'd love to teach you more. Have a great day.